BofA's Mike Gapen has this to say. We retain our outlook for monetary policy, a 25 basis point hike in March, terminal 525 to 550, ongoing balance sheet runoff. Mike Gapen, you wrote that before the CPI print. Have you edited it at all?
No, I haven't. We just think if the Fed, as you mentioned in your previous segment, if they're successful at kind of ring fencing and containing the financial stress for the moment, the broader macro environment, whether it's jobs, inflation, activity, consumer spending, still supports higher policy rates. So we think the Fed's inclined to keep that on track next week, and we look for them to lift the policy rate by 25 basis points and continue with balance sheet runoff. Obviously, that's day to day right now, dependent on market events, but that was our view yesterday. It's our view today.
Mike, why don't you think this SVB issue screams you're breaking stuff, you've done enough, we're sufficiently restrictive?
Well, I certainly think it is a signal that financial conditions have tightened. There was a building narrative that the U.S. economy was impervious or immune to higher interest rates, and certainly parts of the economy are resilient to it, and consumer spending has maintained a lot of momentum, but there's other parts in the economy, housing, business spending, manufacturing output, and certainly, what we're seeing now with potential spillover into lending conditions that do reflect the tightening in financial conditions from the Fed. So I think it does tell you policy is restrictive, and we'll find out where exactly sufficiently restrictive is. I do think higher policy rates are warranted, but yes, the events in recent days do tell us Fed policy matters, and when you raise rates this fast, you sometimes get these financial stress events, and we're getting one right now.
Mike, something came up today, and I'd love your response to it. I know we can tie ourselves in knots thinking too deeply about all this stuff, but just the psychological story that this Fed has to confront on the FOMC next week. It was suggested to me this morning by two people, Priya Misra, TD, Vincent Reinhart, Dreyfus and Mellon, who suggested there was a psychological element to this, that if the Federal Reserve didn't continue hiking, there was some kind of acknowledgement that what they had announced on Sunday wasn't sufficient, and therefore they had to back away on monetary policy. Is there anything in that for you?
I mean, I would say a little. I think in defense of the Fed, the fact that these two things are happening so close together, the stress event and the meeting, makes it hard, I think, if they don't hike, to say, oh, then the ring fencing isn't sufficient. I mean, they just stood up these systemic risk tools on Sunday night, and today's Tuesday. So if they had to pause in March, they could certainly do that, and I don't think it would be an indictment of the tools that they've put into place. If there were more space between the event and the meeting, there'd be more time for things to cool down. But the bigger principle, the Fed can chew gum and walk at the same time. It can use its lender of last resort tools to quell financial market, stress, and It can also keep its broader eye on the macro economy. So the Fed's trying to do that, walk and chew gum right now. We'll see if they can. I think they can do it.
Mike, I've got to squeeze this in. We've got 30 seconds left. If Chairman Powell had day one of testimony in front of the Senate today, like he did this time last week, how different would that address have been?
Probably not so much focused on returning to a faster pace, but yes, a more kind of balanced assessment of dealing with stresses on one side, but still needing tighter monetary conditions on the other. And I do think it supports just, moderate rate increases until we figure out what the right rate is. So I think 25 makes sense for now.